on that one was up 20%, and as you said in pre-open as well, up another 10% odd. Moving on then, channel checks and conversations with various apparel, consumer durables, paints and QSR companies, they suggest a sharp drop in discretionary demand in the past few weeks. To understand whether or not that's happening and get an analyst take, we have Naveen Trivedi, institutional research at HDFC Securities, who joins us. Hi Naveen, good morning. Do you believe that's the case? There's a slowdown in consumer discretionary. What are your channel checks suggesting?
Yeah, hi, good morning, everyone. I would say different buckets behaving differently during this phase. Certainly, some part of the QSR where we have seen last couple of quarters some sort of pent-up, which driven by mobility has driven the SSG and the entire ADS for QSR side. It seems to be on a slightly on a weaker note this quarter. Consumer durable side, uh, we have seen last 2 years they have done a remarkable sort of a performance in terms of the growth and the stock side. Durables last 6 months we have seen commodity-led destocking impacting the quarter 2, as well as we have seen some sort of a slowdown post July also, August also. So thereby some taper down there also. It seems that the B rating impact, which impacted the quarter 2 numbers, some sort of a recovery is expected in the Q3 also. So December month, our channel check suggesting that there has been a good amount of channel stocking has happened in the December month for fans.
Sure. Okay. Actually, Naveen, we are a little surprised when some research reports told us that consumer discretionary demand is weak. It's not making sense. I mean, Sonia just spoke about the airline demand that's going through the roof literally and figuratively. So this consumer discretionary, is it what? The pent-up demand has weathered away? First of all, do you agree that consumer discretionary, upper level consumption is going down?
Lata, I would say multiple things are happening around. We need to understand which part of the consumption is behaving differently. Last 2 months, if you look at traveling, hotels, marriages-driven consumption, we have seen a significant amount of pickup there. And typically, you will find post-festive season, a lot of categories is they started showing a month-on-month decline. Because prior to the festive season time, you do a lot of either pantry loading or maybe channel stuffing sort of a thing, and thereby post festive season time, you will see more a sluggishness in the discretionary side. Although some part, like you mentioned about, there has been some sequentially decline in the consumer side, which I mentioned about maybe the QSR side, you will find slightly deceleration. Durable side, because quarter 2 was a washout quarter because they've seen a messy amount of destocking across categories, driven by
Nav I think there's some issue with your audio, Naveen. Okay, let me try again. In your report, in your FMCG report, you mentioned that you're selectively positive on some stocks like Dabur and Marico. What are these companies doing differently? Is it just valuation upside that you see here?
So I hope I'm audible to you.
Yes, yes, sure. Go ahead. You are audible now.
Yeah. So in the FMCG side, certainly you will find Dabur Marico, where the stock also has corrected from the peak level. The trigger there was that gradually you will find the rural is also picking up versus what we have seen in the last 5-6 quarter, where the industry level there was a massive amount of decline driven by base impact, as well as the rural itself was at a consumption level was tapering down. The expectation there is that sequentially there should be an improvement along with the margin side, where we have seen last 2-3 quarters most of the FMCG names have struggled in terms of the margin side also. So sequentially, both revenue as well as the margin side, we expect improvement over the next 2-3 quarters. And in stocks where we still have comfort on the valuation side, we still recommending in the FMCG side.
Well, Marico and Dabur would have a reasonable rural exposure. Has that picked up? Because they were all worrying that rural demand was weak.
Lata, certainly rural side pickup is not too much meaningful so far. However, you need to understand that the calls are typically more from the 6 to 1 year, 6 months to 1 year sort of a time frame. Our take here is that maybe Q4 and the Q1 is a time when the rural will see a decent amount of pickup in terms of the growth.
Okay. I just had one more question on consumer durables. You write in your note that there are some companies that could outperform on a 3-year revenue CAGR basis. That's Havels and V-Guard. And the outlier in Q2 was Havels. So if someone has perhaps not invested yet in these names, does it still make sense to invest in names like Havels and V-Guard?
So Sonia, last year most durable names disappointed. Our take here is that at least some names in the consumer durable side, they will do well this year. Considering B2B, B2G side also we are seeing some pickup. We are also seeing pickup in the B2C side where destocking impacted the primary level numbers. So thereby the last 6 to 9 months correction offers some entry points. So we remain positive on Havells, Crompton in the electrical side.
And finally, very quickly, any paint companies?
I don't cover paint, so I won't be able to
All
comment.
right. Okay. All right. We'll leave it at that. Thank you very much, Naveen, for enlightening us about some trends in consumer stocks and your favorites. Okay. With that, let's get to Sudarshan and Mitesh for the 9:10 call. Sudarshan, what's your best trade?
Well, buy the Nifty and the Bank Nifty. I've given the stops earlier.